Rep. Hill says he supports one single bill W. Trump's priorities.
This is the Daily Market Rundown live from the Tradelo Trading floor. It's January the 7th and some highlights from today's show. Trump reaffirms that tariffs are incoming. NVID is set to open at record highs and China is a key risk event for the markets. Good day traders, and then welcome to the Daily Market Rundown. Let's get stuck in with some of the overnight news. I think there was two main events, and the first one is of course NVIDIA unveiling some of their new stuff at the sort of the main conference for NVIDIA, the CES in Las Vegas. Now, some of the key takeaways from there, if you sort of read through the transcript of what Jensen was saying, was, they've come out with of course some new chips. The focus is on, of course, this new Cosmos AI that they're going to provide to the market. In essence, what it enables them to do, or what it enables users to do, is move away from having to create their own real-world data scenarios. So think, self-driverless or driverless cars. Ultimately, instead of cars having to go out and get the data for themselves, they can now recreate that data with AI. So an interesting take. Was it new news? Perhaps not. And I think a lot of the big names like Apple and that will be working on their own synthetic sort of AI data creators anyway. So again, not necessarily massive news for the market. Of course, the market is looking to gap up at the open. We're going to open up about 3% at record highs. But I think the key takeaway, which we'll look at in the chart in a minute, is that we are going to open at record highs, and it's really a question of how the market responds at those prices. Now, there were some other takeaways from that. A new gaming chip that is set to sort of really improve, gamers' experience ultimately in the way that computers and graphics cards pixelate images. But again, nothing groundbreaking. There was also something with regards to a developer-specific PC coming in around $3,000. So a lot of interesting stuff, sure, but reminds me a lot of when Apple comes out with these very expensive sort of types of products where there's not really mass market for it. So yes, NVIDIA continues to shine. NVIDIA continues to showcase improvement. But was there any sort of showstoppers? Perhaps not. Okay, and I think that's what we're going to learn today from the market. And that's why if we move on, of course, to our first chart for the day, and we have a look at NVIDIA, what we can see is that NVIDIA very much yesterday got rejected quite aggressively around that 154 mark, and I think that's important. Don't forget, typically the market does rally into these events, and we can see that 12% rally over the last three sessions. It did get rejected, and we did post quite a bearish looking candle despite the fact that we held the gap up yesterday. That being said, we are expected to open somewhere in and around above that record high. The question is, do we close above there today? Okay, I think if we do close above there, it really is going to ignite a little bit more buying into NVIDIA. That said, we close below 153 today, or if perhaps intraday session we get back below that 153, you can bet your bottom dollar there's going to be quite a bit of profit taking in NVIDIA stock. So keep a close eye on that particular open. I think that is going to largely be the play of the day. It's going to very much drive the sentiment in the markets. Now, if we go and have a look at some of the other major overnight news, it was all about Trump. We of course started the session yesterday with a sort of Washington Post report that Trump was going to ease off on some of the tariffs and perhaps only impose them on critical imports. The reality was he came out later on Truth Social and absolutely denied it. And I think the key takeaway there is, yes, we are perhaps going to see the tariff theme being a very important theme for the first quarter or two as Trump of course comes into the White House. So the key takeaway for us as traders is, what was the market impact? Now, if we're going to have a look at the dollar index, that's where we really did see the real impact. The market took it as, well, look, if tariffs are going to be softened, what that means is we're less likely to have any kind of inflationary pressures from tariffs. As a result, the Fed will at least be capable of cutting twice, perhaps a little bit more. And the result was, we can see that dollar index got really aggressively hit when that news came out. If you looked at the euro, the pound, we said this yesterday in the market rundown, both of those were up over 1% on the day. Of course, later on, when he denied that on Truth Social, we did very much retrace almost the entire move. Okay. The key takeaway, I think, perhaps from the dollar index, though, you can see we're right back at those weakest levels. Why? Well, look, the dollar has been rallying very, very aggressively over the last 2-3 months. Perhaps we are going to continue to see the theme of profit taking in the dollar until further notice. For us as traders, of course, more tariffs, stronger tariffs, more aggressive tariffs, strong dollar. The converse of that, if we were to see, sort of less tariffs or less likelihood of tariffs being imposed, we are going to see, of course, a weaker dollar scenario. If you go and look as well at the likes of some of the European indices yesterday, okay, both DAX, CAC were very much, 1.5% up on the day when that Washington Post news came out. So that's where the focus is. That's how you have to set up as a trader. Based on the tariffs, you want to be focusing on CAC. You want to be focusing on the DAX. That's where you're going to get really good bang for your buck trading, as well as, of course, looking at some of the dollar currency pairs. Okay, let's then turn our attention and talk about some of the macro theme. I think China is something that needs very close attention. I posted this tweet this morning. You've got it in the Discord chat as well. It's all about China, and I think this is going to be a key theme to watch out for very early on in Trump's presidency. I think Q1, this becomes a very tradable event. The reality, and you would have seen quite a number of posts on Twitter about this, the reality is that Chinese yields are sinking, and they're sinking very aggressively. Okay, now this is the 10-year yield in purple, and what you can see is we're trading 160. Where should we be trading? Well, look, if the Bank of China's, or at least the Chinese government, want to target a 5% GDP, we should at least see, 10-year yields somewhere in and around that 3 to 4% mark. Okay. Now, again, that's not exact science, but the point is that we can see yields are significantly lower than what they should be, given, what the Chinese government is telling us they're targeting in terms of, growth projections. Now, what that's leaning on is this idea that we are seeing a recessionary type environment in China, a country that's now not recently been struggling. We obviously know the Evergrande, property collapse has happened over, 2-3 years ago now. The result, of course, is we are seeing quite an aggressive debt deleveraging cycle. In other words, everyone bought very expensive assets at very high prices. Those prices have now sunk quite aggressively, and everyone is just sitting on very expensive properties that they can't offload. Okay, so we have this sort of repeat almost of Japan '89, where they now have to deal with a very aggressive debt situation. We have seen, of course, a number of times late last year where the Chinese government comes in with stimulus measures, ways to try and prop up things. I know they came out just recently talking about some form of a subsidy for people who buy smartphones. The reality on the ground is that it's not stemming the flow of yields. Okay, we've really got to follow, rather than follow the news flow, follow what the yields are doing, because that tells you everything investors expect from China. Now, what does that mean for us as traders? Well, look, China at the end of the day is an emerging currency. It's an emerging market. Yes, it's the second biggest economy, but the reality is its currency should be trading like an emerging market currency. In other words, with yields at 160, the currency should be a significant amount weaker. Now, if we go back and we look at the last 2 times the Chinese government devalued the currency, keep in mind they do control their currency very aggressively. They manage it quite aggressively. And the last 2 times they actually devalued it was back in 2017. 2016, and then again in 2019. And the implications we saw once they devalued it, so the devalue point is on that vertical line. Once they devalued, what did the market do? Well, it continued with the idea of a weaker currency. Okay, same thing in 2019. Once they devalued, we got a bit of a continuation of a weaker currency. Now, the result on equity indices at the bottom here, we've got the US equity indices. Back in 2015, we can see a 11% correction in the S&P 500, and then again in 2019, we can see a 6% correction. Okay, the point is that a devaluation from China is not exactly going to be a bullish signal for the global markets. It really does confirm what we already know, which is China is weakening quite aggressively, and the stimulus measures are simply not enough. Okay, pay very close attention to that, because I think in some point in Q1, I suspect this doesn't happen anytime soon. I suspect it'll happen probably closer to the time that Trump comes into office. Why? Well, because look, the Chinese government is not going to want to devalue their currency until Trump comes into power. Why? Because Trump is going to threaten China with these tariffs. The result is, should those tariffs be imposed, the Chinese government will then just simply weaken their currency to combat ultimately those tariffs. Okay, don't forget, tariffs effectively make China less competitive, so the result is they just weaken their currencies. It blunts out the impact of those tariffs. Okay, now you can see very closely on the Chinese yuan, you can see we have been sitting at that 733 resistance for some time now. Once that gets taken out, once we sustain that level, I suspect you will then see a little bit of volatility come into the Asian markets, and you will also see some risk-off mode come into just the general equity indices. Okay, pay attention to that. That is China. It's going to be an ongoing theme all year, whether it's Trump imposing tariffs, whether it's the Chinese yuan trading up towards 8 to the dollar. The reality is it's going to be an ongoing theme, and you need to buckle up because it is going to create some volatility around the world. Okay, now let's turn our attention then and talk about some of the economic data out today. We of course have got the JOLTS number coming out around 1:30, or apologies, 1:33 o'clock London time. That will get some attention, of course, because JOLTS is very much a reflection of some of the job openings, and the Fed is solely focused on, of course, the labor market. Aside from that, it's quite quiet. We have also got we've got PMIs, non-manufacturing PMI data out, which will be closely watched. But yes, like I said, we've obviously got Thursday, which is a day off in the US. So markets are largely going to track whatever NVIDIA does. So NVIDIA is what we focused on as day traders. That's where you got to focus your attention. And of course, keep a close eye on the wires for Trump and some of the things he says. All right. If there are any other questions, do post them in the channel. Otherwise, good luck out there. Manage that risk. Go make some money.